If you're curious to know what factors impact your credit score, then this video is for you. The first and biggest factor of your credit score is payment history. This makes up about 35% of your score. What they're looking for is, are you making your payments on time, or do you have any missed or late payments? If you do have missed or late payments, then your score is likely to be dinged. A helpful tip here is to try to schedule your payments online automatically so you don't have to remember to pay them. The next component of your credit score is the amount owed, also called credit utilization. This makes up about 30% of your credit score. What this looks at is the amount of credit that you have available and the amount of credit that you're using. The lender wants to see that you have a lower credit utilization because that means that you're not using as much credit as you have available. Numbers will vary on how much credit you should be utilizing, but a good rule of thumb is to try to keep it under 30%. Obviously, if you can get down to 20% or 10%, that can be even better. The next component is a length of credit history, which is 15% of your score. Having a longer credit history could be beneficial for you because it allows the lender to see how you've been using credit over the years. So an important tip here is that you might want to think twice before you close out credit cards because that could impact the length of credit history that you have. It's important to really take a look at this to make sure that's a good idea. The next component is types of credit, which is about 10%. So the lender here is trying to see how many different types of credit do you have? Do you have a student loan? Do you have a car loan? Do you have multiple credit cards? Do you have a mortgage? If you have more types of credit, that could be a positive sign to a lender because it allows them to see that you're able to manage different types of credit pretty well. And the final component is new credit, which is 10% of your score. Whenever you apply for a credit card or a loan, your credit gets pulled, and that is a ding on your credit potentially. Lenders like to see fewer hard pulls on your credit when you're leading up to that mortgage process. What other questions do you have about credit scores? Go ahead and drop those below and I'll make videos for you to answer those questions. Take care.